Hi everyone, thank you for joining us for this live webinar in partnership with Square Roots discussing shared ownership as well as their brand new development in Kingston in southwest London. I'm Jade Turnstile from Share Dubai and I'll be hosting today's session alongside Alex Sloan from Square Roots and Anthony Hall from Censeo Financial. However, just before I pass you over to our speakers, I wanted to run through some very quick housekeeping for the session ahead. Firstly, our speakers are going to run through their presentations before opening up to a live Q&A session, which will last for around 10 to 15 minutes. So if you have any questions for our experts, please pop them in the chat tool to the right-hand side of your screen, where you'll see a small speech bubble icon, and we'll get through as many as we can at the end of the session. It's also worth keeping an eye on the Offers tab on the right-hand side, as we'll be sharing some links and downloads with you to engage with throughout the webinar. And today's session will also be recorded and shared with you afterwards. So don't worry if you happen to miss anything along the way, there will be lots of information, but we'll make sure that you can access the recording once the webinar has ended. So that's pretty much it for me for now. I'll be back at the end of the presentations for the Q&A, but in the meantime, I'll pass you over to Alex from Square Roots.
Thanks, Jade. As Jade mentioned, I'm Alex Sloan, Sales Manager for Square Roots. So who are Square Roots? Square Roots was launched at the beginning of 2021. We're a new housing provider with the mission to deliver top quality shared ownership homes. We are uniquely Greater London. With the housing shortage in London, we want to be able to help buyers get onto and also climb the property ladder. Square Roots is backed by award-winning developer London Square, who have an illustrious pedigree and know what it takes to deliver high-quality homes. Square Roots now has over 1,000 affordable homes under construction across 6 London boroughs in locations where people want to live and put down their roots. Later on, we'll be looking at the three of our developments, which will be launching in 2023. So what is shared ownership? Designed as an alternative way to buy, you buy a share using a small mortgage and deposit. The share percentage that you buy is anywhere between 10% to 75% of the property value. You can't buy 100% straight away, but you can buy more shares in the future. This is called staircasing. There's more information on this on our website as well if you want to visit that. On the remaining share that you don't own, you pay rent. The rent is usually calculated at 2.75% of the full market value. The shared ownership scheme is available for first-time buyers and also people who have sold or are in the process of selling their home. You have to have a household income of under £90,000 a year if you're buying in London, or under £80,000 if you're buying outside of London. You have to buy the property to live in, meaning that you can't buy the property as a buy-to-let. And also you can't own another property in the UK or abroad. So for this webinar, we're looking at the benefits of buying shared ownership with Square Roots. One of the main benefits is buying a new build flat. That all our flats are very energy efficient, and it means that you don't have to spend so much on costs. All our apartments will have an energy rating of B or above. And there's a blank canvas, so you can decorate the home as you like, and you don't have to redecorate maybe someone else's questionable interior design if you were to buy a second-hand property. You get the 2-year Square Roots customer care warranty, and also there's the 10-year build warranty. The backing of London Square. London Square is award-winning standards and skills, expertise in placemaking, transforming locations, communities, and lives. And also with the Help to Buy scheme no longer available, this is one of the best ways to be able to get onto the property ladder. And with getting onto the property ladder as well, for shared ownership, it's a smaller deposit, so hopefully you can save up quicker. And also, as mentioned, there's a subsidised rent of 2.75%. As mentioned, with the share that you pay rent on and it being a subsidised rent, here's a quick comparison between renting on the open market compared to buying with shared ownership at Square Roots Kingston. You can see on the left-hand side here, you've got the monthly cost for your shared ownership mortgage, your rent, and also your service charge, compared to buying renting the average property in Kingston. So you can see across all units, buying a shared ownership home is actually cheaper than renting. And moving on to Square Roots Kingston, I'm proud to be able to reveal today on this webinar the launch date for the general public for Kingston. We will be launching the show home on the 1st of April, and you should see on the right-hand side of your screen now the option to RSVP for that launch. So please do go ahead, and we'd love to be able to welcome you to Square Roots Kingston. Square Roots Kingston is a boutique collection of 52 apartments. It's just 6 minutes walk from Richmond Park, and Northampton Station is also within walking distance of just 11 minutes, so it offers you excellent links into central London. Close to Kingston Town Centre, we have the variety of shops, cafes, bars and restaurants. And what's really unique about this development is we have off-street parking available for every apartment. As mentioned, if you are interested in attending the launch, please RSVP on the right-hand side of the screen. And now we'll just have a look at one of our CGI fly-throughs of a top floor, one-bedroom flat. And yeah, that CGI there is of one of our one-bedroom apartments. You see the kitchen there is actually one of our dark theme kitchens. We have 3 different kitchen schemes there, so it really gives you the opportunity to purchase the property, and it gives that bespoke feel, being able to select kind of the kitchens you want as well. To have a quick look at some of the other developments that we're launching this year. So the next development to launch is Lewisham in SE13, launching in June this year. Lewisham High Street was actually voted by the Evening Standard as one of the best top 10 London high streets to live in 2022. So it's a great option for the young first-time buyers to get onto the property ladder. Square Roots Lewisham consists of 116 shared ownership apartments, as well as commercial and retail space on the ground floor. Lewisham Station is within walking distance of the development, which offers fast transport links into central London and Canary Wharf. All apartments have private balconies or terraces, with some apartments offering stunning views across the London skyline. The third development to launch for Square Roots in 2023 is Hendon. And we'll be looking to really transform this area in Hendon, delivering close to 240 shared ownership apartments spread across 7 buildings. The development, again, is very close to public transport. Hendon Station and also Conondale Underground Station are within walking distance. This is also an area that we expect to see a lot of growth over the next few years, and will benefit from the redevelopment of Brent Cross Shopping Centre. I'd like to hand you over now to Anthony Hall as well, for new business director from Censeo Financial.
Good evening, everybody. As Alex said, my name is Anthony Hall. I'm the new business director at Censeo, and I will talk to you about the mortgage market and how the affordability process works for shared ownership. So first and foremost, tell you a little bit about Censeo. Who are we? As I said, we are mortgage advisors. However, we do specialize in shared ownership. Censeo was actually set up just for the use of providers providing shared ownership. So we don't do any other types of mortgages other than shared ownership. Previously Help to Buy, but that no longer is available. Our senior management team has 80 years of experience in financial services and also the housing sector. So we are very knowledgeable within shared ownership. We do support banks and building societies with products. We also speak to government about shared ownership and how it can evolve. We're endorsed by Share to Buy, housing associations and the Greater London Authority. And we are an award-winning mortgage brokerage for the services that we have provided in shared ownership. So what does the shared ownership mortgage market actually look like in 2023? Currently, there are 29 lenders who offer shared ownership mortgages nationally. Some building societies, high street lenders, and other smaller challenger banks will provide mortgages on shared ownership. Of the 29 lenders, 25 of those will actually lend with a deposit size of between 5 and 10% of the actual share being purchased. Really important to understand, it's not of the full market value of the property, but of the actual share that you will actually purchase. High street lenders, like I said, are available, and with Censeo being specialists in shared ownership, we do obtain exclusive deals, and not just ourselves, there are other specialist mortgage advisors in the market who sometimes will have access to deals as well. So there are strong reasons to use a specialist mortgage broker, which I'll talk about shortly more in detail. To become a specialist broker, more than 50% of the business that you do has to be in a particular sector. Okay. Now, one of the myths of shared ownership mortgages is that the interest rates are higher and they're different to you buying on the open market. This is incorrect. Interest rates are in line with the open market, and currently there are rates as low as 4.19% available. Now, today we're going to talk about the benefits, and Alex has started doing that. He showed you a slide with regards to renting against actually owning at one of the properties in Kingston. I've taken a property value of 500,000 and compared the cost of purchasing the same property on the open market. So essentially what you'll see here is that if you bought a 25% share of a £500,000 property, a 10% deposit would be 12,500, 10% of the 125. So the mortgage required is 112.5. Now the income required is just over 60,000 at 62,150, and that could be a single income or a joint income of 62,150. Now rent is payable on the share that you don't own. So in this example, it would be £859 based on you paying rent on 75%, and a service charge of approximately £200 per month. Now, a mortgage repayment on a mortgage of 112,500 works out to be £590 per month. Now, that's based at an interest rate of 4.78 over 30 years. Now, click the button by accident, sorry about that. So the monthly cost would be £1,649 per month when you take into account mortgage, rent, and service charge. Now, in comparison, everybody desires to buy on the open market, but shared ownership is a lot more affordable. Now, what you'll see here is the same ownership of 100%. You need a £50,000 deposit if you want to put down 10%. So you need £450,000 worth of mortgage. But the big key there is the income is 94,737. So quite a jump there. Same service charge, and the mortgage repayment then is £2,278. So you are then looking at £2,478 per month in your monthly cost, just under £2,500 a month in comparison to just under 1,650. So if we look at the key figures here, shared ownership, the difference in the minimum deposit required is 37,500, which is a massive amount of money when you're looking at saving. Now, the income is 33.5, pretty much less than required on the open market. Now, in London, the average salary is just over £40,000. So a £33,500 difference in income is obviously very high. Now, your total monthly payments in comparison to the open market against shared ownership, you're paying £820 less per month, which obviously is a significant amount. Now, one of the things that you also save on when you buy shared ownership is stamp duty. Stamp duty, with shared ownership, you pay on the actual share. You don't pay stamp duty on the full market value of the property. Now, you can choose to do that. So if you're buying a 75% share, for example, and you plan to staircase quickly up to 100%, it might be that it works out financially better for you to pay the stamp duty on the full market value. However, in most cases, people will only pay stamp duty on the actual share, reducing the liability that's needed and reducing the upfront costs required. So in terms of the process of actually going through a mortgage and being assessed. At Censeo, we try to make the process really simple with the associations that we work with and the developers. So if you were to buy a property through Square Roots and Censeo, what we would expect you to do is you view a property. If you like the property, you'll register an interest, essentially make an offer. Now, that can't be a financial offer because the prices are set. So you would essentially register your interest in the particular property. If that's accepted, we would have to do an assessment to make sure that you qualify. That's where we come in. We'll do an affordability assessment, make sure that you are able to obtain a mortgage as well. Now, once we'll do the mortgage application on your behalf with the lender, we'll speak to the solicitors. So once you've got your mortgage offer, you can exchange contracts. And then the next step is that you complete and you get your keys. Now, that makes it look very easy. People do say that one of the most stressful things you will do is buy a property. The idea is if you use specialists like Censeo and you work with developers like Square Roots, the process is a lot easier because we will hold your hand throughout that process. So it can essentially be a 7-step process, which should be quite easy and less stressful than if you buy on the open market. So how the affordability is assessed. Some of you may have done assessments previously. For those who have no idea, there is something called a Homes England calculator. So Homes England are the registered government agency who manage shared ownership. So all of the criteria and policy is set by Homes England, and every single registered provider has to follow their guidelines. Now, before we actually pass you, what we will do is complete this assessment, and it's that the assessment will confirm if you can afford the minimum share being sold and if you meet the eligibility criteria. So like Alex said, we'll be checking that you meet the income requirements, so you don't earn more than 90,000, for example. Some developments you have to live or work in the borough, for example, as well, so we'll check those eligibility criteria as well. Likewise, we'll determine the maximum share that you can afford to buy. So the calculator will determine. It used to be that you were able to choose what share you buy, but with new build shared ownership, the calculator dictates and your mortgageability will dictate what share is potentially offered. Now, there can be negotiations. So if there are circumstances where your income potentially will change, so it's not possible for you to buy a bigger share, that can be discussed. Now, essentially, to pass the assessment, what we're looking at is your monthly income versus your actual outgoings. So mortgage, rent, and service charge. Any commitments that you have, such as loans or credit cards, pension deductions will be taken into consideration also. So just to touch on the key eligibility requirements. So just to go over again, outside of London, the maximum you can earn is 80,000. Inside London, it's 90,000. And we'll also be checking to see if you're able to purchase that property on the open market. So if it's deemed that you have enough income and deposit to buy the property that you're interested in outright and you don't need shared ownership, you would be deemed as not qualifying for shared ownership. Now, primarily, you're expected to be a first-time buyer. However, it isn't compulsory. So there are circumstances in which you could have previously owned a property or you have a property under offer for sale. Again, you don't have to be a first-time buyer. But as Alex said, you can't own a property currently in the UK or abroad. Okay. Shared ownership is available on resales and as well as new builds. The assessment criteria is pretty much the same for both. So what does it look like to pass an affordability assessment? So there are a few key things. Firstly, I mentioned earlier about the monthly mortgage, rent and service charge against your monthly income. So very easy. If you take home £1,000 a month, for example, the mortgage, rent and service charge cannot exceed £450 because the maximum, what they call debt to income ratio, is 45%. There is a minimum because the scheme is government funded and there is a subsidised rent. The scheme is there to support people who need it. So if your monthly mortgage rent and service charge is less than 25% of your monthly income, you are deemed as too affordable and wouldn't qualify. Likewise, the mortgage that you apply for needs to be between 2.5 and 4.5 times your actual salary. Every single bank or building society will have a minimum deposit requirement. As I said at the beginning, there are 25 lenders who will lend between 5 and 10% deposit requirements, but dependent on your individual circumstance, it may be that you require a bigger deposit, for example. So a good example is if you're on a visa, currently most people will require a 15% deposit if you are on a visa. So if you haven't got 15%, then you wouldn't qualify, unfortunately. So therefore, it's possible to actually pass the Homes England assessment, but actually fail overall because you're not able to obtain a mortgage. So one of the things that we do is we need to make sure that Homes England assessment actually tallies up with a mortgage calculator. So every assessment that we carry out has a human oversight, ensuring that you don't fail when you should pass, and vice versa, that you don't pass and you're not actually affordable or you're not able to get a mortgage. So there are essentially 3 steps for you to actually be what we call a verified past assessment. You need to meet the Homes England calculator requirements, pass a lender's affordability, so therefore being able to obtain the amount of mortgage that you need, and then pass a lender's criteria. If one of those are not met, then unfortunately we would say that you're not able to proceed. Now, one of the best things you can do when you're at the beginning of your search is get all your documents ready and understand what affordability you have. So in terms of the documents, first and foremost, you will need to present who you are and where you live. So your passport for identification and proof of residency for all addresses that you've lived in for the past 3 years. Sometimes that can be difficult when people are renting. So I will say, if you are renting and you have bank statements, for example, going to your parents' address, then it is important that you do have a utility bill registered at your current address, because where you actually live is where mortgage applications have to be submitted. Income needs to be evidenced, and it's taxable income. So if you're employed, it's the last 3 months' pay slips. If you are a weekly paid, then it's 13 weeks of pay slips that are required. For those who are self-employed, depending on whether or not you're a limited company or you're a sole trader, essentially we will need audited accounts, SA 302s, and the tax overviews. The tax overviews are confirmation of the actual tax that's been paid to HMRC, and we will need at least the last 2 years ideally. There are circumstances in which, if you've only been trading for a year, that 1 year accounts can be reviewed, but that would need more in-depth assessment. If you receive any benefits or any additional income to your basic, we will need to see evidence of this income. Savings and deposit. If you've got savings that you've incurred over time, we will need to see a build-up of the funds, a statement of the account. Typically, we would say 3 to 6 months worth of build-up of the funds. If you've had lump sums go into your account, then you will need to demonstrate and evidence where that money's come from as well via statements. Many people provide a gifted deposit. Typically, gifted deposits are acceptable from family, immediate family, so mother, father, siblings, grandparents. There are some lenders who would accept gifts from friends, but they are not many. I'd probably say there's 2 lenders that will accept gifts from friends. Primarily, it's family. But again, speak to an advisor if you are getting a gift from a non-immediate family member who will be able to advise you on your options. Financial commitments are really important because that will impact your assessment. So it's really important that if you haven't got a credit report, that you do get a copy of your report so you can see exactly what information is being registered. Credit card balances, any hire purchases, personal loans that you have, even mobile phones now. A lot of the time they're on buy now, pay later. they will actually flag up as credit commitments. So when banks do checks, they will factor that in. So do get a copy of the credit report. And there are quite a few agencies that if you sign up, you will get a free trial for a period of time. The likes of Experian, Equifax, Check My File. Bank statements is really a good exercise to get your last 3 months bank statements and have a look through, just to get an idea of your budget as well, so you know exactly what your spending habits are. All mortgage advisors will ask for your last 3 months bank statements because it gives a good picture of what your expenditures looks like. If you've had any adverse credit, CCJs, defaults, or you've had any missed payments, it's really important that it's flagged very early. Hence, I advise to get a copy of your credit report. It doesn't mean in the current market that you can't get a mortgage or you won't be offered a property. It just means that we will need to do more thorough checks, and it will have to be looked at in detail. It can be, realistically, if the CCJ or the default hasn't been satisfied, so you haven't paid it, it is unlikely that we'll be able to get you lending. However, if we do get lending, if you've got CCJs or default, it's going to be typically at a higher interest rates and higher fees. So it's really important, if you have had any adverse credit, CCJs or defaults, that you get a copy of your credit report over to an advisor sooner rather than later. So I mentioned that specialists are really important when you're buying shared ownership. Shared ownership is essentially, in our eyes, the fourth tenure of home ownership, but it is a specialist area for mortgages. We've been doing it, as I said, for 16 years. I myself have been at Censeo 16 years. And in that time, we're endorsed by Share to Buy. So you will find information about Censeo and our details on the Share to Buy website. We work with a number of housing associations in the GLA, and of course we work with Square Roots. We're established in shared ownership and home ownership mortgages. We do get exclusive deals with lenders, and just on new build is really important that, as Alex said, there are many benefits of buying new build in terms of EPC ratings. So a lot of lenders now are offering what they call green mortgages, where the interest rate actually is slightly lower, as well as the fees, because they realize that your energy costs will be lower than if you buy on the open market. So, and that's something that the government are really pushing, that lenders do work with house builders to make sure that the green agenda is really pushed. So they are offering preferential rates. So that's something, if you buy a new build, to take into consideration. But that's, again, not always available for all brokers. Solicitors, again, it's really important that you use a specialist solicitor who specializes in shared ownership. The legalities are very similar to buying any property. However, with it being shared ownership, there is a special lease, a shared ownership lease, that they will need to understand and explain to yourself. So we would strongly advise that you use a specialist solicitor. We work with majority of solicitors that specialize in shared ownership, and that will save you time and money ultimately. As I said, it is essentially a 7-step process, but how long it takes and how much you spend really does depend on the people involved in that for you, in that journey. So if you want a fast and effective service, my advice is strongly to use the specialists available and recommended to you. Again, finally, all of the advisors at Censeo are friendly and knowledgeable. So what we try to deliver is a hassle-free customer journey. And hopefully you'll see from my presentation today that we are very friendly and knowledgeable. So finally, I'm going to leave you with how to establish your price range, because one of the most important things is to be ready when you find something, to get all your documents together, but it's good to know what you can afford. So to establish your price range, we actually have an app for shared ownership that you can download from the Apple Store or the Android store, so Google Play for Android, and that will give you a rough guide as what's affordable. Likewise, we have calculators on our website that you can use under the affordability assessment tab. And then we have the portal, which is our main assessment portal, where that's for a full assessment. So once you've actually found a property that you're interested in, you can actually fill in the details of the property if it's not in the portal already, and we'll be able to tell you exactly how much you can afford of the actual property. If you're not able to get access online and you just want to download a Word form or a PDF, you can do that as well. Thank you. I'm going to hand you over to Jade.
Thanks so much, Anthony. Right, just coming back to you. Fantastic. Loads and loads of information there. Thank you so much. Really informative. And I can see from the chat box that we've had tons of questions. So we're going to jump straight in. Can I just double check with you? Can you hear an echo from me? Is my audio okay? Just want to make sure.
It's all fine.
Perfect. Thank you. Don't want to be deafening anyone. Right. Loads of questions. Alex, we'll start with one for you. Are you able to rent out a spare room? Can shared owners take in paying lodgers? So we had a couple of questions around this.
Okay, great. Really good question, actually. So you can do, if you were to buy, if you're a single occupant and you were to buy a 2-bedroom property, you can rent out, you can get a lodger in that second bedroom. It just can't, that money that you receive from the lodger can't go towards your income, and it can't help support kind of the repayments. So you can do, but you just can't rely on that money to repay your rent and mortgage and service charge.
So if a person was looking to buy and they were planning to have someone move in with them paying as a lodger, that money wouldn't be taken into consideration at that stage. You have to be able to do all the affordability checks on your own income, and then if they choose to move in and rent out, you can rent out a room to them. So if you're doing a assessment with Anthony, you couldn't then use your income and then the lodger's rent as a boost to help you buy a property. Fantastic. Anthony, loads of questions for you as well on the finance and mortgage side. So would someone in their first 6 months in a job be considered for a mortgage? What about if you're still within your probation period?
So there's two things here. Yes, you can be considered, but it will be dependent on, firstly, how long you've been in that type of work. So some lenders will want to see a 12-month work history, that you've been employed for 12 months consistently, and the size of the deposit that you actually have available. So it may be that if you haven't got a 12-month history, for example, of working continuously, that you might have to have a larger deposit than the 5 or the 10%. But it's definitely feasible that you can buy in that position.
Perfect. And just because we usually get questions around it, I think I saw a couple in there. Are you able to still get shared ownership mortgages if you are self-employed? That's a question that always comes up for us.
So you can. I touched on it through the presentation. Typically, you just need to have 2 years worth of either audited accounts if you're a limited company, or as a sole trader, something called SA 302s and tax overviews. And what we're looking at, the figure that we use that people always get confused with, it's the net profit. So after you've earned your money, you've paid all your costs and expenses, what you actually have net is the figure that we will use as your actual income. We do get a lot of assessment through where people put their gross earnings, and then when we come and see the documents, it's actually the net figure which we have to use. So then unfortunately it's then not affordable.
All really good stuff to know. Thank you. Alex, back over to you. So obviously we touched on taking in a lodger there. I know generally speaking, subletting isn't allowed. So actually moving out of a shared ownership property and renting to someone else. But someone has asked, what happens if your circumstances change, such as moving away for work? Is subletting allowed then?
It can be, but in very particular circumstances, it would be something that you would have to go back to the housing association, so Square Roots, to request, and then we would have to seek advice from Homes England. But in very rare circumstances, if you to move away for work for 6 months, and obviously you love your home and you want to live there, but you don't want to just leave it empty, then we would look into that and seek kind of reassurance from Homes England.
Just to add to that, from a mortgage point of view, you would need to notify the lender because your mortgage is a residential mortgage. So it is designed for you to actually reside at the property. So if you're going to be away from the property and then essentially rent it, you need to get something which they call consent to let. So you need to get essentially permission from the lender to rent the property out and not reside there, and that could mean a change in the actual interest that you pay on the mortgage.
That's really good to know. So essentially making sure you speak to everyone involved, getting that right information, but very good to know that that can affect the mortgage side of things as well. Thank you so much. And then Anthony, back over to you. Is there an age limit on mortgage availability?
So there are lenders that will go up to age 80 and sort of 75 in terms of a mortgage term, but there are some variables that need to be checked. So do you have an occupation? That means that you could potentially work to that age, for example. Likewise, the Homes England calculator actually stops at 75. So we're not allowed to take you past 75 with the Homes England affordability assessment. So it is restricted essentially up to 75. It is dependent on circumstances and occupation.
Fantastic. Thank you so much. And then Alex, one we get every single time, we had it as soon as the chat started. Are Square Roots dog friendly? Do you accept pets in your homes?
Yeah, so one of the really good positives about Square Roots Homes is that our leases, we are pet friendly. We just request that you do complete a kind of a pet license, and then we can give kind of confirmation on that. So yeah, we don't like to discriminate.
We're a nation of dog lovers and pet lovers, aren't we? No, it's so important. What I will say for anyone who is looking to buy shared ownership, whether it be Square Roots or otherwise, always just double check with the salespeople you're talking to. If you're already living in a shared ownership home, check the terms of our lease, because some of them may be that you can have a small dog or a small cat. But if you're living on a 7th floor apartment, you might not be able to have like a Labrador or a Rottweiler or a big dog. So always worth checking before you commit yourself to a home where you might not be able to have a pet if that's what you so desire. And then Anthony, you covered general shared ownership figures, but is there a minimum required income for Square Roots Kingston, whether joint or single?
So funny enough, something that we discussed yesterday. Typically speaking, it depends on the size of your deposit as to what the minimum income will be. So what we will say is, once the price list is ready, if you go on the Share to Buy website and you find the development, you'll be able to do an assessment. And at that point, once you put in all your income details and your commitments based on your deposit, we'll be able to tell you whether or not you meet the affordability or not.
Yeah, it's a question that we get asked quite a lot. As I say, kind of on the price, when the prices are available, and then you can be able to speak to a financial advisor like Censeo. On the Square Roots website, we do also have an affordability calculator, and it does give you a bit of an insight for kind of minimum incomes. The only thing I will say on that is that the service charge is not included in that, because we don't know the service charge on every single property, but it gives you a general idea for your minimum income if you're looking at a 1-bedroom, 2-bedroom, 3-bedroom, and so on.
I think to add there is that the size of your deposit will impact significantly what income is required. The bigger the deposit, the less you need to borrow. Likewise, the better the interest rate you get, the larger the deposit that you have.
Brilliant. And Alex, at what point can you start buying more shares in a shared ownership home? So at what point can the staircasing process kick in?
So it's really, there's no set time, but it's really once land registry has been updated and you are on the title of the property. And at the moment there is, I think, quite a lot of backlog with land registry in general. They say it usually takes between 6 to 12 months to kind of for that to go through. But really, once you are kind of registered on the title, you can then start to staircase. So.
Typically, from a mortgage side of things, you can't normally remortgage for at least 6 months. So if you need to borrow further to enable you to staircase, you would typically have to wait at least 6 months to do that. Obviously, if you're doing it via cash, then it's slightly different.
Fantastic. So yet again, checking the terms of your lease, speaking to Square Roots, speaking to Censeo, speaking to your lenders, just making sure you're talking to the right people at the right times to make those big decisions. Lovely. Anthony, I will be going on maternity leave in a few months. Congratulations. So my pay will reduce. Will this affect our affordability?
So it depends. So some lenders essentially will take your salary pre paternity, but you will need to evidence how you're going to fund your repayments whilst you're on any reduced statutory maternity pay, or if you're able to provide savings to show that you'll be able to bridge the gap, then that'll be fine. What we will need as a bare minimum is a letter from your employer confirming the date you're returning to work, as well as the salary that you'll be going on when you go back. Because it happens, I wouldn't say it's all the time, but people go on reduced hours or reduced pay, then obviously that lower income would have to be factored in. So it's really important that you have the terms of your return ready before you apply, and you're able to obtain that letter and demonstrate how you're going to keep up the affordability on any reduced income.
Fantastic. We've got loads of questions here. Keep them coming, guys. Thank you so much. So we have one here. If you want to buy more shares or sell your shared ownership home, who will fix the value of the share and how is that calculated? So Alex, I don't know if that'd be one for you.
Yeah, sure. So we always encourage that people were to staircase and own more of the shares. It would be the case of just coming back to Square Roots and just notifying us that you want to staircase. The person that sets the price is done by a RICS accredited surveyor. So they would do a valuation on the property, and that valuation is what you would then pay for staircasing, or if you were to sell the property, it'd be the same. And that's the same with us and Square Roots. We don't set the price; it's set by a RICS accredited surveyor.
Fantastic. And we've had a couple around kind of maximum income. So what if I earn more than the 90,000, say in London, or 80,000 outside of London? Is there no way I can qualify for shared ownership?
Unfortunately not. If those caps are quite strict, I have seen people be over it by £5 and the authorities not agree for people to proceed. So if you are very close to the cap, and even if you receive any bonuses or overtime, that will be taken into consideration. I've had one recently, somebody I think was on £85,000 due to get a bonus of £10,000, and that's tipped them over.
Yeah, it is. I think people have to remember it is affordable housing at the end of the day, so there needs to be some kind of cap. Obviously, with that, and Anthony, you could probably expand on this, but as long as you're earning under 90,000 in London or 80,000 outside of London, and when you actually agree the property, your income doesn't have to stay under that level. If it then does go above later on down the line, that's absolutely fine. It's just at when you do buy the property.
So it's at the point essentially of assessment, and when you're sort of fully signed off and the sale commences, as long as you're under the cap at that point, then it's all fine.
So you just need to be underneath for that assessment, and then if you get bonuses increases after the time, then that's absolutely fine. And actually, that's what a lot of people then use, those kind of increases in payment to help staircase. Exactly that. So
and it's exactly that. It's for people to get onto the property ladder. It's for those. It's not there for you to be earning under £90,000 and that's it. It's for kind of young first-time buyers or second steppers to then be able to grow in their career and be able to buy more shares, maybe even resell their property, one shared ownership property, and buy another one and upscale. So that's really what we want to do with Square Roots.
And one of the things that we do, sort of linked to the staircasing as well, is that once you take your first mortgage with us, we actually have regular reviews where we obviously look at your income, look whether or not it's viable for you to staircase. Because as we said, the scheme is designed for you to hopefully own 100% if you desire. So when we're reviewing your mortgage, we actually have something called a lifetime fee. So once you basically pay that fee, you don't pay anything further for staircasing or remortgaging. So we have that regular communication so we can assess your ability to buy more shares and review your income as you grow.
That's the benefits as well, as you say, Anthony, with using a specialist, is that you're a financial advisor, you're not just a mortgage broker, or you are there throughout the lifetime. And why we always say to buyers, it's worth speaking to that specialist. You can obviously get your mortgage directly from a lender, but they are just going to give you that mortgage and that's it. Whereas you guys will be able to help them throughout the process.
And I think one of the things that we actually do is at that initial sale, when they purchase, it's talking about staircasing as well. So somebody might buy a 50% share to begin with, and we can actually map out and see, well, it might be 2 years, 3 years, 5 years where you might be in a position to buy more and how much more. So even down to saving, we can almost work out, you'll need to save X amount, or, your income will need to increase to Y for you to staircase to where you want to. And those conversations happen all the time.
Brilliant. What I would say is to the viewer that asked that question, not forgetting that there are other housing schemes available. While Help to Buy recently came to an end, and just because you're not necessarily eligible for shared ownership, there's first homes discount, there's deposit on lock, there's London Live and Rent, which if you're in the capital can help you save up for a deposit to then buy in a few years' time. So it's definitely worth doing your research, looking at all these alternate schemes. Don't be disheartened by the fact that maybe shared ownership isn't the one for you. Just look at the alternatives. I mean, on Shared to Buy, we have lots of different kind of articles and pages dedicated to all the different schemes, whether that be rental or home buying. So definitely have a look, because there still might be something that works for you out there. But that was all really informative. Thank you so much, guys. I think we've got time for one, maybe two more questions. So we'll chuck out one that I think is definitely both of you. How long does it take from first inquiring about a property to actually moving in? I imagine there's lots of scope, but I'll hand over to you for that one.
Yeah, so obviously from a Square Roots point of view, Kingston, that we're going to be launching on the 1st of April. The apartments are due to be completed and ready to move into by late summer this year. So that the whole process will take kind of about six months or so from kind of reserving to moving in. But typically, and Anthony, you can jump in here, but if the property is ready, it can take 6 to 8 weeks.
It's funny because it does really vary dependent on the lender and also your sort of personal circumstances, how much underwriting, somebody who's employed, good income, no commitments. We've had mortgage offers within a week. The legals, it's a solicitor that knows development. They've done many sales there, so they know how to, all the inquiries are all raised and been answered, and we've had people complete in 3 weeks. So it can really be very, very quick, but I would say on average probably 6 to 12 weeks would be a standard time.
I think that, as you say about solicitors and usually specialists from a mortgage broker that understand, financial advisor that understands shared ownership and using one of the panel solicitors. So on every Square Roots development, we will have a selection of panel solicitors, and we provide them with the lease prior to launch, so they understand it. They can start conversing with our solicitors. So a lot of the inquiries will be raised up front. So a buyer can then select one of our panel solicitors, and a lot of the information will already be there, and it just that just alleviates the time and also the stress as well. The worst thing you want is trying to get hold of your solicitor to try and feed the information or try and speak to a lender. So if you can use the recommended specialists, then that really does help and speeds up the process and hopefully causes less stress.
Definitely. I think I said it at the end of my slide in terms of why to use a specialist. I think it takes away a lot of stress. And again, the speed element, it's like anything. If you have a BMW, for argument's sake, if you take it to a BMW garage, they're going to be able to diagnose the problem quicker than if you take it to a Ford garage. It just kind of goes without saying. And I think it's exactly the same here. A shared ownership specialist, mortgage advisor and solicitor will be able to do things quicker and more efficiently than somebody who does shared ownership maybe once or twice a year.
Naturally, you want someone with the most amount of experience helping you through this process, because, I mean, for the most part, shared ownership does go to first-time buyers. It's not exclusive to first-time buyers, but often that is the case, and it's your first time going through this experience, and you just want people there, like you said earlier, Anthony, to hold your hand a little bit and kind of go, don't worry, we know what we're doing, because Lord knows we don't as buyers when we first kind of step into it. So that's amazing. I think because we've run over a bit on time, we're going to have to call it a day there, but you've answered so many questions, so thank you so much. I can see that we've had loads more coming in. What I'm going to do, guys, is I'm going to pop up. Oh, sorry, Anthony, go on.
to add one thing. So I know we've got some offers at the end that you're going to talk about. I see in the chat that there's a question about NHS. So I just wanted to say that unfortunately things like NHS grants and such things, unless they confirm that they're going to be running essentially forever, we can't take those in terms of affordability. However, anyone who is an NHS worker, we do provide our services for no fee. So it's completely fee-free for anyone who is an NHS worker. I just wanted to get that in because I saw the question.
That's fantastic. Bonus question, bonus answer there. I bet that person's very, very happy. Thank you for that. Yes, what I'm going to do is I'm just going to pop a extra slide up here with the URLs for today's speakers in case you'd like to find out a bit more about them, the services they offer, and also obviously if you have any questions for Square Roots about their developments and shared ownership, for Censeo about the mortgage and financial side of things, and for us at Share to Buy, we're a property portal where you can search for homes such as Square Roots Kingston. You're welcome to kind of have a little look through those websites afterwards. I would also just say, as a reminder, we do have a link you can engage with on the right-hand side in the offers tab, which is for the Square Roots Kingston event that's coming up. And also in the files section, there's a downloadable brochure for Square Roots Kingston as well. And pretty much that's it for now. I wanted to say a massive thank you to Alex and Anthony for joining me today. It's been an amazing session, loads of questions answered, and I think you've really, really made everyone's pancake day. So thank you for that. And also a massive thank you to all of the viewers who watched and engaged. We really hope you found the session useful. If you'd like to access the recording of the session, that will be going live across the Share to Buy website and our social channels within the next 24 hours or so keep an eye out. And if you'd like to keep up to date with any future webinars or events, you can create an account with us at sharetobuy.com and keep an eye on our Facebook, Twitter, and Instagram accounts. So that's it from us for now. Thank you again, and I hope you enjoy the rest of your evening. Thank you, Anthony. Thank you, Alex.
Thank you.
Thanks all.
Thanks. Bye-bye.
Thanks. Bye.